Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. And as it looks like we have been holding this 618 line as a possible bearish retest double diamond drop to the downside. Could this be a Bart Simpson to drop us down to the 0.5 down here at 28,690? I don't know. It could. We are currently not holding the 618 line. We are beneath the line on this pitch fan mean reversion path to the upside. We have this resistance drop, resistance drop. Are we getting resistance drop potential? This is a basic one-day rise up out of here, and this meandering between the two indecision doji spinning top. Are we going to see a burst up to come down out of here? That is something to look at. Let's go look at the liquidity on this 𝗥𝗲𝗹𝘁𝗲. What is 𝗥𝗲𝗹𝗁? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those stop losses slash liquidation points lie. So let's go look at the liquidation levels on 𝗥𝗲𝗹𝘁𝗲. Please consider subscribing and hitting that like button because it does justice to the subscription for this that we share with you for free. So on the 1 minute time frame, we are losing a lot of stuff to Father Time as always, so we can only look at where we stand currently, which is -2 billion in short liquidity to the upside. We did see this $365 million pool pinged in up here, and the pool is thicker to the upside. However, if we look down below, let's see what we can see down below. We marked the pools yesterday. If you want to know where those are, you can look at the yesterday's stream. But basically here at 29,328 you have 220 million, and then you have 365 up here at 31,536 on this range of a high or a low pool. So we have to go expand our vision to the higher time frames to see this pinged in on the higher time frame external liquidity range. Internal versus external liquidity is a concept. You can look it up for more information. So we previously pinged this on both days. We wicked and whacked both of them during the options expiration here. As it stands right now, you do have some on the 7-day time frame, a lot of liquidity up above and some down below. Currently it looks like there is more up above. If you start to look sub 24k, there's people with stop losses willing to weather the journey down below, a lot thicker down here. And you got more just a hop, skip, and a jump up above here at 31.6. So they could come stab these guys before coming down lower. In the external range beyond 32k, there is more down here on the 7-day time frame. So do you go up to go down is the question here on the 7-day. If we expand our vision to the monthly, you will also see that 30+ billion exists up above here at 31.6 and 31.7. Now coming to $36 billion up here at these two ranges on the monthly time frame. You do have some thickness down here, not approaching double digits just yet, but getting to be there on that 29.4 region, which we bounced off of the other day after previously hitting the double digits down here, the 20 billion that we were calling to come back into. So as it stands right now on the monthly time frame, you are more imbalanced to grab these guys at the 31.7 region, and beyond that point I don't know, but you do have some large pools down sub 24 that are just chilling like a villain in profit. So are they going to remain in profit, or are we going to Bart Simpson down to grab them? When they do Bart Simpson, they just do it because they want to come back to these guys with a passion and a fury, so they just gap down out of that range. Is that something that could be on the table? Bart Simpson as a trading concept, if you're not familiar with it, you should look up Bart Simpson pattern, because it is a thing. You have these ideas where it does come gap back down to that region. So are we going to see a similar thing occur? If it cannot manage to hold that range, it could come down out of it. So this could be a Bart Simpson pattern to the downside, to back down to these regions, or at least down frugally to the 28k to recover some of this candle on the daily time frame, as we see here. So do they go up and clear this range here at the 31.58 region and come down on the monthly time frame? There is that suggestion. But as you start to expand your vision to higher external pools, you do see that there is some up in weight up in these 32 and 33k. The path is paved to go higher as well. So the 6-month time frame, 6-month time frame looking mighty hot for down here at that 24.6 and 24.3 region. It would be an awesome fake out to the downside if they do come grab these guys, this is mighty hot that they left on the table. It was previously already pushing 100, but now we're at $123 billion down here at the 24.6 and 24.3 range. So this would be that Bart Simpson territory to come grab that if they do come down to that region. However, if the bullish narrative is still on, you do have 100 billion at a hop, skip, and a jump at 32.1 and 32.7, 33 and 33.3 and 33.6. You have nearing 100 billion at each one of these ranges, all the way up to 33.6. So the narrative to push up to here is still on. We did talk about how when they previously come down to these ranges, they do spawn some divergence and leave some on the table, which they did here. So do they leave some of these guys on the table when they reverse? Does it come up to the 32.8 region and come back? That is the question. Let's go to the 2-year time frame and see what type of pools are percolating on there. Getting mighty hot up 24.4, 100, nearing $200 billion now. The highest liquidity is there, and down at 15K, 207 billion at 15.2. So the entire region down below is getting yellow hot, although in the most immediate range you do have 450 billion all the way up to 33.2 that could be taken. So 33.2 is the start point where it starts to taper, and by taper it's still $100 billion up at 34, 33.6 and 34 even, and then it tapers by half at 34.4. So as it stands right now, up to the 34K region, you do have a nice liquidity pool to tap into in terms of buy side liquidity for those shorts. Will we come up into this range and spawn some divergence up at 32.8 or 33.2? That is the question of the weekly candle close that's coming right around the corner. Monthly time frame, this particular high region having those 40 billion, if for a frugal guesstimate. We did hit the target of that grab the other day. Let's go into our Binance chart and go over what we saw. Shout out to everyone here. All right. So we previously had this 236 entry model for the short of the trend-based bearish fib extension level. It honored that with the candle close here on the 6-hour time frame, so you could have entered frugally off of that into profit, boom, all the way down to the 1 level with no drawdown whatsoever. And that's how this model works. It's kind of an ABC continuation pattern where you have this impulse retrace continuation to that zone. Now it didn't even get to that down here, but it still honored that 236 entry idea. So as it stands right now, you could be still looking at rejections off the 618 of this impulse here to come down to this 618, which we have yet to wick off of. If we look at where we stood on our last update, we talked about coming down and finding some sort of bounce idea, and that did bounce off of that, so we can delete that now. Did not bounce off the 618 like we were thinking, but it did come down and spawn some divergence, which we'll get into in a minute. These are the pools we outlined for both areas in terms of the 300 million and the 220 million down below. Let's go ahead and throw on our oscillators and get to work. Heads up display on. What is this little bit of happiness? Well, this is the Momentum Master suite from momentummaster.info. For more, you can toggle on all these toggle switches of the indicator and or look at each component as we go over them. What's up, CNC? How you doing? All right, so we reclaimed this thick cloud on the hourly with the reclamation here, and the cross-up event had you at hello when you close this candle here. We were not online, we were at work at the time, but we talked about coming down to try to find some idea on the low here, and then holding this candle in above the baseline could have been your entry model for that on Momentum Master. The idea of Momentum Master is that it provides you the path, and you just enter with the idea in mind and, you know, take it for what it's worth and see what it's going to do. It's often more correct than it is not with the baselines. That's why the baselines are what they are, your first sign of reversal, and one of the few leading moving average formulas you will find. Back tested to be true, and right now we have a cross down event which is confirming as well, so you can take that for what it's worth on the hourly time frame. We're starting to reset the hourly time frame. We had a sell-off PVSRA volume candle attempt to hit here and get sold off. What was that about? We'll figure it out. The money flow was above the RSI, which is starting to deviate back down. We're getting a potential Williams cross down event on the hourly to come down to test this reclaimed cloud on the hourly time frame. Let's make our ascent today. Let's do something different. We'll ascend through the time frames and start to build what's happening in the moment, and then go down from there. So you had some bearish divergence on the 15-minute that's starting to play out here with that stab up on the hourly, and then you're getting this cross down event in the Asian range open here. That was into the just after the daily close. So we closed down here and then surged up and then got sold off. Some player exiting their position. Market selling off into the 618 of this impulse. How did I get this impulse? Well, I just took it from wick to wick here on this pattern here. So this wick to wick in the momentum that it went was to the downside. So you have this 618 rejection. This played out nicely for one hit rejection, and then we're getting another bunch of hits up into that golden pocket. So if we're going to see a reaction to reject, that would be here in this golden pocket region, and then come down to this little impulse here for a reaction, which we have yet to target. So this would be an inducement pattern, inducement model, which is getting internal liquidity built so they can go stab at some internal liquidity for a move, which will be the real move. They did not recover this wick, so I would personally like to see them recover it properly if they're going to go to the upside. If not, then this could be targeted to come back down lower. All right, so if we look at the 15-minute, this is currently resetting alongside the hourly. Williams having ambiguousness as it's coming down. And if we go to the 4-hour, we just looked at the hourly. Well, let's look at it with Momentum Master B real quick. So yeah, we had that Williams potential cross down alarming event, and the MACD, I believe, is crossing down. Yes, it is. The leading MACD formula is crossing down. By the way, if you didn't know yet, you can get these alerted to your phone, these pump or dump on Momentum Master B for the MACD cross down and cross up events. I do get those myself on the 5-minute, and lets me know on my phone which direction the market is heading last. So if the last word I see is pump, then it means it's going up. If the last word I see is dump, then it means it's going down. It's a nice little measure that keeps you plugged in to the matrix without having to be opening your phone all the time. You can just glance at it like this. So I can look at this and then it'll show like pump or dump on there. All right, so if we go to the 4-hour time frame, 4-hour time frame did reclaim this meandering cloud. We were talking about this cloud thinning and coming down here and stabbing at it, which it did, ironically enough. And somebody was pointing out this kind of diamond potential here. I do kind of see what they're talking about here. I have seen this type of play before. I'm still not going to buy into anything per se. You had some hidden bullish here on this money, the RSI here. So you had hidden bullish divergence. You had two double bottoms here and a lower low on the RSI. So this hidden bullish is what started to play out here. So you're seeing the hidden bullish play out on the 4-hour time frame. You had a double bottom on the Williams starting to reclaim 50 and come up here in a very subtle way on the 4-hour time frame. If you look at the MACD has crossed off and is potentially, coming to kiss it to continue higher on the MACD, leading MACD formula. And if we go to the 6-hour time frame, the 6-hour cloud was curving and giving this preemption of that drop prior to it happening. And now we're getting this sharper angle of this volume taper idea. Are they winding up for a pitch to the upside? This money flow coming beneath the RSI in a manner here could subtly start to push up to that 32K region based off of the reclamation of this cloud. We previously saw that reclamation on the 4-hour, and we saw where that went here, where it started to, even back here, it reclaims the cloud and boom, it reclaims the cloud and boom. So starting to reclaim the cloud and test it for support, and holding candles above the cloud is a sign for going up, and testing cloud, having this come up to try to test the cloud and bearishly retest it and close beneath it goes down. So you're looking for these type of closes above the cloud for these type of continuation ideas to occur. So in the next 2 hours 21 minutes, do we start to see some more like if it does sell off here and holds this as strength, then you could be seeing this other stab up attempt. You have a shoulder, head, it's very messy, but you have a kind of a complex head and shoulder, perhaps like shoulder, head, and like shoulder out of here, if this is the bottom. If we go to back to the 6-hour real quick, let's take a look. Okay, yeah, so you did reclaim that 6-hour time frame. We were looking for the close back here. We wanted to see some more continuation with conviction to the downside, which did not occur. So this is trying to show some strength to continue higher, perhaps an ABC out to this region. The ambiguousness of this taking off and meandering around, it's winding up though with the money flow coming back. We previously saw that with the money flow here, and you got some divergence off the money flow, and boom, it shot up from that point. So are you going to get some more money flow divergence? Let's go to the 12-hour time frame for that subtle time frame thing. You do have the money flow flowing out here well beneath the RSI as we stay sideways. So a lot of people positionally taking profit, maybe into spot buyers, I don't know, but they're taking their leverage positions out, perhaps to inject it back in. The Williams is starting to come down in a manner here. Where did this happen before? We went over this before over here. It was in March time. So we had this Williams start to come down, and it suppressed the 12-hour for a bit, but then we came back up and reclaimed it and shot up beyond. So are we going, this took a long time too, that was like 27 days I believe. And also here you have the Williams high. Here the Williams came down, reset a little bit, and then boom, we shot up beyond that point. So just because the Williams is high does not mean that, and this is low, does not mean that it will get suppressed every time. This is where you start to look to the higher time frames. This was in our initial impulse out of here from January, so this was still fresh in the concept of continuing higher on that initial run at the liquidity for the shorts. So if we look at what's more similar to now, I would say is more around here, this region at March 25th, where we started to meander around for a week or so, and then we came down here, ran up on the liquidity again, held the cloud, and then we were gone. So from that surge up from there, the cloud came up to us and we held it, and the Williams did not completely reset. The only complete reset idea was down here with that double bottom fertile crescent at April 24th. We said that was a good opportunity as well for that long play. So the money flow is extremely deviating from the RSI here. This is very unique by comparison. The last time we had something like that was back here on April 23rd, Sunday, that type of deviation, and we came right out of there pretty sharply. That means there's a lot of possible selling off into the the volume is leaving, the money flow is leaving while holding that price range. So the strength is still strong while the money flow is leaving, is winding up for a potential pitch out of here on the 12-hour time frame. As we've indicated, there is those imbalances up in that 31.6, 31.7 and beyond region on those external ranges. So coming up out of here to grab them, whether that will be a fruitful thing to do without going down first or not is the question. Once again, this was going sideways for 22 days before it made its move out of there, so there's no need to happen immediately either. They could induce more and play more games because we've only been in here 9 days or so. So this could just continue in a manner here where we stab up to come back down to consolidate when we trap as many as we like and then go up. We did create that 𝗥𝗲𝗹𝗁 thing already, so starting to kind of wind up. I would say this kind of fractal idea, let's just do bars pattern. Let's do some fractal magic here. Yeah, it would basically be, it's not really working. Sorry, give me a second. Either way, just playing around with that. All right, so the 12-hour time frame does look like it could be having that subtle potential to go up alongside the 6-hour, which is slightly ambiguous. So you have those medium time frame support structures starting to hold for a potential stab to the upside here. Kind of got shoulder, head, and possible shoulder on the Williams. The Williams does have patterns that you can see play out. That's particularly the double bottoms. The double bottoms are kind of good things to take a look at. If we look at the 22, how did the 22 reset? Well, the money flow came back to the RSI here on the 22, suggesting that it's just trying to maintain this range. We are coming up on the stochastic, just hold in a holding pattern. Williams is coming down nicely. It could continue to suppress this more, and this could open back up to the downside as the 22-hour crossover event is confirmed. Let's see how the daily crossdown event has now confirmed as well. We are getting the Williams coming, the average of the Williams coming up to that zone where we talked about, where the potential crossdown event with the alarm could occur. And when these occur, it does bring with it potential to come down in a similar fashion here. You have the crossdown event with baselines holding, and boom, we came down there. Granted, we had this fake out crossdown event, and then we went higher. Chances are we go up to that 32, clear some of this liquidity out of the higher range before a sharp reversal would be in order. I'm moreover expecting some sort of stab to the higher external range up here, the buy side liquidity range. Why do they call it buy side liquidity? Well, it forces the shorts to cover their shorts by buying at that price, which causes them to offload their sell position to the buy side liquidity. So the buy side liquidity, which doesn't want to buy up here, is forced to liquidate into a buy order, which allows them to exit at a sell, and so they can sell off onto the buy side liquidity. Conversely, the sell side liquidity is selling at a loss, the long sell at a loss here, and then they buy it up. So that's the idea, is it's the opposite of what you'd expect to occur. As they drop, they're buying, they're selling, and then they buy that selling up, and then the buy side liquidity up here is buying at a premium, and then they sell off into those guys. Okay, so daily time frame, we're seeing the cross down event confirmed. You could take this at face value, or you could wait for a little bit more confirmation on the liquidity side of things. A stab up to one of these regions, rejection at one of these higher time frame points of interest, like this wick level. We have two basic zones that we've hit up in here, so you could look for some sort of third attempt up to this region. The 12-hour and the 22, the 12 and the 6-hour are looking to potentially go up. Let's go to the 3-day. 3-day closes in a day with the weekly candle close. Interesting to note, 3-day will close in 22 hours. The 3-day previously had this cross-up event confirm on the Sunday, June 18th time. So we're still not at that fatigue point that we saw here. So I remember putting this out on Sunday, April 16th, talking about the cross down event, which brought with it a fury of downside for basically 60 days. So a cross down event on the 3-day is to be noted, and a cross up as well. So this 3-day subtle support of coming to the upside here could be in order, as these are separated in a manner here, suggesting more upside. If we go to the 5-day time frame, 5-day is trying to negate this cross down event, which confirmed, needs to go up to this region to see that to be true. It could just double top and come back down. You have about 2 days and 3 days for that to close. We are at the weighted moving average resistance level here. Previous support bounces off them, now potential resistance point. If not, then you come up into the adaptive resistance level up here at this region. Going to the weekly. I'm going to go to a chart without all the fibs on there. It's a little busy for me, so let's go over here. So the weekly is basically starting its ascent again by the looks of it here. Could be coming up on the double top scenario again, triple top. Where did we see this before? Well, we saw something like that back here on October 2020, where the weekly was starting to come up on the stochastic RSI, while the Williams dipped down slightly into this negative 37 region. Here was negative 33. So are we starting to see this come up for a weekly surge up here on the thing that is different? So what is different from that time? Well, on this time you were reclaiming the adaptive moving average, and you confirmed it as support and went up. Here, what's the difference? Well, here you are coming above the adaptive moving average. If you close it above this level, you could be confirming it as support. So the adaptive moving average here at 29,359, if you close the weekly candle above this on a weekly time frame, even on this weighted moving average at 30,168, if you close it above these levels, then this could be confirming that as support for a weekly continuation idea. And the weekly trend-based fib level would put you at, well, that's right where we're at right now. For that 236 entry for this first impulse is up to where we were here, and then they took profit at the 1382 and then came back down into the 65 for a bounce up here. So coming back into that continuation idea would put you in these regions up here in the 32.4 to 35k region, reclaiming some of these vectors. So overall, the higher time frames are suggesting more upside from the 1 week and the 3-day in your favor. 3-day is overbought though. Wait, is this a different chart? What's going on? Oh no, same. So the 3-day is getting overbought on the stochastic RSI, but could get pinned by the daily here. Daily coming and curving in a manner that could continue higher. Get the cross down event confirmed, something to the bearish undertone. Slight curvature of the cloud here. $22 hour cross down event still intact. Williams coming down, potential suppression, weak volume, and the momentum is not opening up super strong here. The money flow did come up only to maintain. We're going back down, descending. 12-hour. I've never seen this deviation on the 12-hour like this though, so this is novel to me. $12-hour time frame, 10 hours from now. $6-hour coming up here in a manner. Reclaiming that cloud nicely. Cross up event confirmed. So the lower time frames want to express some upper momentum from the 6 on down. So basically the 6-hour cross up event to the 4-hour cross up event from here is still intact. The 4 hours still holding these baselines. So the 4 and the 6 hour are bullish alongside the 1 hour reset here, coming back to kiss the cloud. So overall, coming back, even though this Williams could dump on you, it could come back to retest this cloud zone for some confirmation continuation idea on the 15-minute as well. Asia coming back down here. Okay, so where could we see this come back to in the interim for Sunday? Coming back into some of these 100x pools. $29,925. Let's see, $29,925. That's all the way down there. Yeah, I don't know if that would happen. Let's see. So this entire range of 50x and 100x little baby pools here, and then you have baby pools with some bigger pools here. So the 365 million at 39,929. There's just some thicker interest being generated to come up to these regions to take out these guys when we drop down here. They immediately came down. Let's zoom in and show you a little bit in more detail. Okay, so they previously came back with the fury to these pools here. So those guys are actually taken out. I get confused because it happens so quickly. So the 284 million here got liquidated almost immediately, coming up with that spike up here. So the current guys that are still on the table are over here. These pools, which are quite thick, coming up into that 30,929 region. I think we already marked that off. 30,929, yeah, right here. So coming up to this guy to grab them towards the second part. If we go down, then we're most likely going to go double bottom. So you'd be looking for a double bottom event here for the weekly candle close to ensue. I'd just like to see some sort of recovery of the wick here, coming down into this region to come up higher would be ideal for me personally. Okay, so we're getting a 618 rejection here. So coming down to, let's just say 9 p.m. tonight, New York open, we come down into that region. That'd be ideal to come and sweep the lows to come higher. And any point below that, you could see the bounce off here. The hourly time frame does look like it wants to bounce with the 6 hour. So the hourly coming down here, coming to the cloud, you could find some point of interest here at this step of the journey if it holds this region. On this little mini fib level, 30,446. So if it does manage to spawn some divergence of some kind on here, and you disregard that hourly alarm, got some ambiguousness on that cloud. Let's go take a look at the total, and then we'll come back to it. Let's say what's up to everyone here. Shout out to everyone. What's up? What's up? David Kendall, what's up? All right, so the total, crypto total, doing the cloud is actually much nicer in curves here. So you have, you got that like nice curvature here that spawns into that nice curvature here, suggesting that it continues higher. So you had this potential of the curvature coming up nicely in a manner here. Bitcoin was less thick, if you will, and this one also tapering in a nicer manner here because it includes the entire crypto space. The interesting thing about Momentum Master is the more volume that is present, the more accurate this tool becomes, which is why NASDAQ becomes such a furious beast with the suite. So we're currently having a cross-up event which has confirmed on total, and if we continue higher on this, let's see where we are poised to go. We had previously, let's go to the daily time frame. So we had previously had this impulse retrace idea on the daily time frame, which has come to fruition up in the $1 trillion region, getting a rejection off a trillion, 1.23 trillion to be exact, coming down to the 0.65, meandering up above the resistance, then failing, bearishly retesting the 706 trapdoor opens. We come down, we maintain the 236 entry model and come back up to resistance. So we're coming back to the 786 region with a cross-up event on the daily still intact, although getting to that fatigue point. So coming back into this region for a fulfillment of this daily total range, coming to pierce the highs. The adaptive moving average also holding on the daily time frame as of this moment in time. If we go to the daily stochastic, you could be coming up for a double top scenario on the daily time frame, which means an injection of money could be inbound for that, coming to these balanced price range fair value gap areas. This is a fair value gap that it could come back to frugally and without hesitation. And if that insinuates money coming in at some point, we do have a cross down event to contend with on the 12-hour, which is what's causing the consolidation. And the 6-hour having that cross up with very little volume present as of the moment, waiting for most likely the weekly candle close for that event to occur. So ideally, you'd see the people positioning up for a, if they're going to continue long, it would come back into these cloud and then bounce off the cloud for some confirmation. You are getting kind of a rising wedge effect that could just come back, recover some of this wick on the 6-hour before continuing higher. Ultimately though, it does look like it wants to go higher on those higher time frames. The 4-hour time frame also crossed up from back here, still continuing in a manner here, breaking down and then getting bought back up would be the thing to watch. All right, and yeah, we're getting into the minutia here, so we'll stop there. Interesting to note, the DXY did hit my projection zone of this fair value gap recovery, and we hit it to the letter almost. Actually, not almost, we did, and then it started to come back here. So that projection is complete, so we can delete it now. Congrats to that completion of the projection. And we can do this now because it's done, and we'll reset fresh on Monday. That was the bearish trend based fib level 2 of the 0.65 rejection. Boom, and then coming back. So we're still in the bearish territory. So that was a small little bullish bounce. Could be continuing on Monday though. We'll see. I'm not going to do a DXY analysis just yet. All right, so let's go back to BTC, wrap it up for in a nutshell, and bring it back to you. So basically, you have the hourly cross down event in play right now, and you're waiting to see how far down that takes you. Now, on a short-term basis, it could see a reaction here off the cloud flip, and it also is a 618 of this retraced level of this small impulse to the upside. On the larger impulse idea here, you have the 618 down at 30,232 as another area of interest. If it fails that, it comes down to here, and ideally you have some more liquidity down here that needs to be recovered off of this wick. So that is another area of interest that you could be taking a look at there. So how far does this hourly take you down? It is the weekend, so not seeing so many. It's going sideways as the weekend likes to do, and so leading into the end of the daily close. This is later on today for New York Open idea. So looking at what the hourly wants to do, does this Williams event take you down? You're already getting some reset of the stochastic here, so it could just react off of this small level here. If we go to the 15-minute, it is Asia though. Asian sessions don't really bring with it much, and we are holding currently the super trend level. This has been holding since July 1st, so we're going to see another reaction off the super trend here if we come off of this. Frugally, I'm waiting to see for some double bottom confirmation of some nature. This to me is not a double bottom, so this could be an internal liquidity inducement to come lower and take out some of the liquidity. We're not really seeing so much interest. I'd like to see a stab at one of these pools first. Take out that 50x pool, 365,929. This 929 pool. I'd like to see this guy get taken out before we drop though. So the 4-hour cloud coincides with this 618 idea. So holding the baselines and the 618 here would be your ideal thing to take a look at. And that could be your ABC into Monday. Trying to close the candle on that range high zone. So ideal continuation idea would be to come into that range of a 618 bounce out of here at 30,446 ish. If not, we know where the levels are down below. And that's my story, and I'm sticking to it. I think the overall undertone is to be bullish and attack that liquidity at 31,750 and above at some stage. Yeah. We did get that stab to the zone we were talking about, the supply range here. They knocked out all of these longs to a point. They didn't come back into this just yet. But that could have been enough. That could have been enough. All right, ladies and gents, that's all I have for you for today. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff. And you enjoy your weekend with your friends and family, and I will catch you on the flip side. Peace.